What if I told you there's a powerful institution shaping your rent, your loan rates, and even your chances of buying a home, but most people barely understand it? This invisible force is called the Federal Reserve, and right now, many experts say it's pulling the rug out from under the middle class. But is that really true? In this video, you're going to learn what the Federal Reserve actually does, how its decisions affect everyday people, why middle-class families are feeling squeezed, and finally, whether the Fed is a hero or a villain or something in between. Stick with me. By the end of this, we're going deep but also clear. What is the Federal Reserve anyway? The Federal Reserve, often just the Fed, is the central bank of the United States. It isn't the government and it isn't a private corporation. It exists in this weird hybrid space where it sets interest rates, manages the money supply, and tries to keep inflation in check. When inflation heats up, the Fed usually raises interest rates to cool things down. When the economy slows, it can cut rates to boost spending. This sounds technical, but here's the key. Those rates directly affect your wallet, from mortgages, car loans, and credit card interest to how much your savings earn. This is based on how the Fed uses interest rate policy and monetary tools to influence the economy. The middle class squeeze, what's really happening? Now for the middle class. Remember this term, the middle class squeeze, meaning wages don't keep up with living costs. Inflation rises, but income growth lags, so real buying power shrinks. And meanwhile, asset prices like houses and stocks keep climbing, but those mostly benefit the wealthy. A recent global report shows that lower and middle-income households see tiny growth or even decline in real income, while top earners benefit from rising asset prices and financial buffers. It's this divergence that gives the economy a K-shape, where rich people pull ahead fast while everyone else barely moves or falls behind. This has become a major talking point among economists and even the Fed itself. So how does the Fed play into all this? When the Fed raises interest rates to fight inflation, it makes borrowing more expensive. That means higher mortgage payments, pricier car loans, and more expensive credit card debt, which hits the middle class hardest because they rely on loans more than the wealthy do. Higher rates also don't raise wages at the same pace, so the middle class ends up squeezed from both sides. This is often cited as one reason why everyday Americans say they're struggling financially, even when stock markets and GDP look fine. Another part of the story comes from quantitative easing. That's when the Fed buys financial assets to inject cash into the economy. Since the 2008 financial crisis, and especially during COVID, this has helped push up asset prices, stocks, real estate, bonds, to historic highs. But guess where most of those assets live? In the portfolios of wealthy households. That's why critics say policies meant to help the economy end up increasing wealth inequality, because rich people own most of the assets that go up in value. Are there any benefits to middle-class families? This isn't all doom and gloom. The Fed's mandate also includes supporting full employment. Cutting rates can make borrowing cheaper, helping stimulate business investment and hiring. Some recent Fed actions included interest rate cuts aimed at supporting jobs and economic growth, which can help workers across all income levels. Here's the twist. The Fed alone can't fix inequality. Monetary policy isn't designed to redistribute wealth or guarantee wage growth. That's primarily a role for fiscal policy, taxes, social programs, and wage laws. Secret tip. If policymakers actually want to help the middle class, tackling structural issues like affordable housing, minimum wage stagnation, and tax fairness will matter way more than any single rate decision. Monetary policy can influence the economy, but it can't rewrite the rules of wealth distribution by itself. So, is the Federal Reserve destroying the middle class? Not exactly. But its policies are a big piece of a much larger puzzle, and one the world is still trying to understand and fix. If you want more videos breaking down big ideas like this, hit subscribe and let me know in the comments.